Joining us now is Kim Anderson, our Extension Crop Marketing Specialist. And Kim, it's that time of year, time for the wheat tour, and is there any good news that you can tell us this year?
Well, there's some good news, but it's limited, and that good news would be that some producers are going to harvest some wheat, and that wheat is a very resilient plant, and it is going to produce a head and a kernel or two. You look at the Oklahoma crop tour, it came in at 66.5 to 70.5 million bushels. You've got to go back to 1957 to get below that, when it was 43 million bushels. You look at Kansas, it also came in relatively low. They were talking 32 to 34 bushels per acre in less acres. And of course, Texas is in worse shape than Oklahoma, which is in worse shape than Kansas.
And as a result, are we seeing an impact on prices?
Well, I think we've seen that impact already. You go back to late February, the wheat prices at Kansas, that KC July wheat contract price was right at $6. It went over $8 this week, and I think that increase in price is because of the drought. It's because of the freeze that's created these thin, this low wheat yields and abandoned acres and the low production expectations. Also, we've got the Ukraine situation coming in there that's given us a little boost in price, and it's kind of probably the joker in the deck. And you've got the tight stock. So you look at this, the market has adjusted for it, and what we got to remember is the market has already factored in this low production estimate.
And kind of what everybody wants to know, how high prices will actually go.
Well, nobody knows how high prices can go. If you just look at losing Oklahoma, Kansas, and Texas wheat, we're probably near the top. If you start losing more wheat like that, and you start losing foreign crops, as we hit out into August and September, we could have $9, $10 wheat. But let's look at the percentage of the time over the last 5 years that the price has been certain levels above that. You look at $7 wheat, 40% of the time the cash prices have been above $7. $7.50 wheat, 25% of the time the price has been above that. $8 wheat, only 16% of the time. $8.50 wheat, only 9% of the time has it been above 8. And of course, the high wheat price is just above $9, and above 9 is 0.02% of the time. So with wheat prices around $7.60 for a forward contract, the odds are around 23% that it's going to be higher than that.
And you're also keeping your eye on a big report for next week.
Yeah, there was the reports coming out. I don't have any pre-release estimates on that, but I can't see any way that they would increase hard red winter wheat ending stocks very much. I think the stocks are going to remain tight, and that should support our price through the June-July time period.
And finally, with all this in mind, when should producers be selling that wheat?
We got a lot of volatility. We lose some wheat in some of the foreign, Australia, Argentina, or Europe, or some of the other, the former Soviet Union countries. We could see $9, $10 wheat this year, and producers wouldn't want to miss out on that. I think staggered in, maybe sell half of it if our prices hold, sell half of it at harvest and hold the other half to stagger in throughout the year.
Okay, Kim Anderson, we'll see you again next week. Thank you.